Hi everyone, I am Maegann Yarbrough, your AZ real estate geek. I am a local realtor here in the Phoenix Valley with eXp Realty. Today I'm going to give you my market update for May for the Phoenix Valley. Are you curious about what's going on in this crazy real estate market? Well, keep watching. And before we get started, I wanted to let you know this channel has market updates on a regular basis, as well as neighborhood tours, home tours, and tips and tricks for buyers and sellers. So while you're at it, hit that little subscription box right there and be sure to subscribe, hit the little thumbs up and the bell. I'd really appreciate it. Today for this update, I am using statistics from the ARMLS, the Arizona Regional Multiple Listing Service, which will be covering the general Phoenix area. We're going to talk a little bit about the current market, what's going on with that, and we're going to compare that to what happened last year. But keep in mind that April 2020, last year, a lot of us were still sheltering in place due to the pandemic. So the numbers look a little different, but really not much, because even during the height of the pandemic last year, real estate was still moving. I'm also going to compare some of these numbers to just last month and show you some of the differences and trends that we're seeing in the market right now. So let's start with home sales. In April 2021, we sold 10,193 homes for the whole entire month of April, comparing that to 10,399 in March. In April of 2020, it was around 8,800. So home sales have dropped a little bit, which is kind of a big deal as we are watching the trends of people going in and buying homes even in this low inventory market. Houses are flying off the shelf. We're actually seeing a slight softening in demand. The median home price in all of the Phoenix metropolitan area is about $374,000. So that's the median price that we're seeing that homes are selling for in the month of April. We're comparing that to last year, it was about $300,000. So it is a big jump up in the median prices. We're seeing that the lower priced homes just aren't coming on the market as much, so they're just not factoring in that median price. Last month, the median home price was $358,000, so that is a fairly substantial jump. We're seeing still in the double digits, increasing year over year. The nice thing is we are anticipating that dropping pretty soon, but it's probably going to be another year before it's a noticeable difference. Average days on market is making a big difference too. The average days on market right now is 29 days. We're comparing that to last month where it was 34 days, and in April of 2020 the average was 49 days. So what's happening with our days on market, they're dropping because homes are moving really fast. Usually I'm showing houses Friday, Saturday. They've gotten multiple offers by Sunday, Monday. It's just how it's going. So the average days on market are dropping drastically, especially when lenders can close loans in as little as 3 weeks, or you have the influx of cash buyers that are prominent in our market right now, which is shortening that time as well. Another nice change is our absorption rate. So this is our housing inventory. How many houses are coming in as new listings versus how many are being sold and closed. Our absorption rate right now is just about at 1 month. Last month, I think it was 29 days. The month before that, it was 28 days. So what we're seeing there is with that absorption rate, that means that the demand is dropping. So the demand of buying homes is dropping slightly, and inventory is ticking up just a little bit. In April of 2020, it was 2 months. So you can see that it has been dropping. Inventory is still kind of stalled a little bit, but since demand is a little less now, the inventory is starting to open up for buyers again. Sales to list price, last month it was 101%. The month before that was 99%. We are now at 102% sales to list price. What that means is if you list your home for a certain amount, it is almost guaranteed that it will be sold above that list price. We're seeing a small growth, tiny bit of growth in price changes on the MLS. What that means is if a home is overpriced, it'll sit on the market for a little while, probably a few days, a week, a month, it depends on the seller, where they're determining that maybe the price point's a little too high and they will adjust the price point to go down a little bit. We're seeing an increase in those price changes, which is encouraging because it means that there is a way that we're kind of correcting the overinflation of prices right now. We have so much equity growth in the valley right now that if you are planning to sell your home, please reach out to me and talk to me about your options, because I don't foresee it going up too much more going forward. I know a lot of people have also been taking their time to go out and buy a home, and their excuse is that we're in a housing bubble, that it's going to crash, and they're waiting till the prices get chopped down like they were in 2009, 2010, and that is not going to happen. I am pretty darn sure of that. And I plan to put a video out here pretty soon on why we're not in a housing bubble. I'm working with a few clients that wanted to buy 2-3 years ago, and they wanted to wait until the bubble popped and they could get it cheaper, but now it's just harder to buy a house. One thing that was a little bit interesting, the interest rates overall dropped down again a little bit. So last month they ticked up to 3.17% for a 30-year fixed loan, and now they're hovering at like 2.99. I've seen some a little lower, not that many that are higher. So we're kind of dipping below the 3% mark again, which is great if you're still thinking about buying or refinancing. So take advantage of that. I don't think these interest rates are going to stay this low for long. I'm pretty sure by the end of the year, we're gonna get up to almost the 3.5% and start climbing from there. If you're looking at the rental market right now, the median rents are about $1,800. Some trends going on right now. Investors are still investing. They are primarily focused on residential investments right now. Rentals are still at a premium. From my experience, I'm not seeing as many like fix and flips, because it's really kind of hard to get a low price on these houses unless you're getting something wholesale. But definitely a good time to buy and hold. So being able to get a home and turn it into a rental and rent it out for a few years would be highly profitable right now. Some investors are starting to invest in commercial retail buildings, maybe because retail is going to start trending back to the mom and pop storefront kind of thing, but a lot of the retail outlets that we see too can be repurposed for something different, like industrial or residential. One of the challenges some people are facing right now is the new administration is passing a tax bill that is proposing to do away with the 1031 like-kind exchange. And if you're not familiar with a 1031 like-kind exchange, it's basically a way investors can take a property that has built some equity and sell it. So they have equity from the purchase or the sale of that property. And when you have equity like that, you have to pay a capital gains tax as an investment property. So what you can do with that right now, and since 1921 when this tax law was introduced, is to take those capital gains and roll them into a slightly larger real estate investment. So you could have 2 condos that you bought as rental properties, and you decided to sell both of those and got basically a profit of $30,000 off the sale of both of those. You could take that $30,000 and roll it into a duplex. And doing that, it defers the taxes that you would normally have to pay on those capital gains. If this current bill goes through, they're talking about doing away with that completely, especially for people who have incomes over $400,000. The problem with that is the 1031 exchange helps stimulate growth, especially in small businesses, where a small business can buy a smaller property, and as they grow, they can roll that into another one. But since the capital gains are deferred in this situation, they're not done away completely, but they're deferred, that money doesn't directly go to the government. So I think they're just trying to get rid of this so that we can pour in a little more tax money to help stimulate the economy. I don't know. What do you think about 1031 exchanges and what this might do if that is taken away? Lastly, one of the trends I'm seeing right now is the move to more of the outskirts of the valley. I have been showing homes in Maricopa, Santan Valley, Casa Grande, going on the west side, there's Buckeye. So there's a lot of people moving on the outskirts. And I'm seeing that because, again, they tend to be a little more affordable on the outskirts. There's new construction going on there. And as more people are starting to work from home and not concerned as much with the commute on the freeways, that they can get a larger home. They can get a little more house for their money on the outskirts. And I mean, they're developing really nicely. There's lots of shopping, there's more jobs out there. So it's kind of nice that that's an option if you are not a central Phoenix person. So that's my little update for you guys today. I am working on making this a little more flashy and interesting, working on things like that. Please tell me in the comments below if there's anything that you'd like to see in a market update. I know they are very popular these days. People just want to know what's going on. So let me know if you have any questions in the comments or contact me directly. Here is my contact information. And I'd love to help you with your real estate needs and questions. And as always, stay geeky, my friends.